Going on YouTube, keep this one short because honestly there's not a whole lot to talk about, but we got some economic data out today. The JOLTS report, which I'm learning about this kind of for the first time for me, what this stands for. Basically just a jobs report. Job openings is the major focus of this. And who would have guessed we get basically flat to negative numbers as far as job openings. We miss to the downside basically. The major number that I've heard multiple times today was basically they anticipated 8 million job openings this month, and it actually was like 7.4 million, roughly like that. So, I mean that's a big miss in my book as far as what they think was going to happen and what actually happened. And then also, who would have guessed they revised last month's down? So if you remember, last month we had big jobs numbers where we're like, oh man, the economy's rocking and rolling. Look how good it's doing now, and they just revise it down the next month. And if this is one of the ones they revise 2 months in a row, they'll probably revise it down again next month because those numbers are fake. I don't know how else to say it really. Like, these numbers can just be manipulated in a lot of ways to kind of come up with whatever. We'll see. Like, I think ADP, the big payment processor, comes out and releases jobs data later this week. I don't think they would manipulate those numbers nearly as much since it's a private company. And we're seeing all kinds of stuff happen. We're at stock market all-time highs, but we got some funky shit going on overseas. And if you understand it these days, we're in a global economy, so the United States doesn't live in a vacuum where we are not affected by what's going on over in different countries. So China obviously has been having their issues, and they continue. Their issues persist. Germany is looking at auto manufacturing slowing down / shutting down, depending on what we're talking about. Certain German auto manufacturers, Volkswagen I think was the big one that was talking about their plants are just not efficient enough, and they're just not selling cars. And I mean, there's all kinds of things that roll into this, but literally it's just the demand is not there for these things. In one of these jobs reports too, in like a stock report as well, D.R. Horton, I don't know if you know who they are. They're like America's #1 home builder, basically. They're a giant development company, home builder and developer. Actually, where I work right now, we work with D.R. Horton personally. Obviously not like the head of the company, but we have our own little branch and own little department that we work with them, where we design their stuff for them. So they, like I said, they build the most homes in the whole United States, and they're coming out and saying the demand for big homes is falling. People are buying more townhomes or like those row home type things, which are basically just cheaper because they're like a apartment house hybrid. If you don't know what they are, and people there's no demand for these super expensive homes. There's not no demand, there's falling demand, let's say it like that. And really demand as in people just can't afford it anymore. It's the same with the cars, especially German manufacturers. I mean, if they're talking Mercedes-Benz and BMW, these are like luxury. They're not really luxury anymore in my mind, but they're expensive. I'll tell you that. They definitely still cost a lot of money. And that's really the sentiment is fallen. I've talked about it before. Consumer sentiment is down. The future outlook on the economy is not good. And basically, with these job reports, it shows like obviously the job openings are going down. It means companies are hiring less. They report quits, which I didn't know they did. Honestly, that's pretty wild. But less and less people are quitting, which if you would read into that, logical conclusion would be people are going to quit and leave to when they change jobs or leave the workforce, but likely they're going to change jobs to leverage that into a new position and try to move up. But if there's less jobs open, less people are going to quit because the opportunity is not there. And right now is not the time to really be quitting your job unless I guess you have something already lined up completely on the other end, because the job openings are going down. It might be harder and harder for you to find a job, so you want to stay solid where you're at. I think I talked about this a month or two ago of like just making yourself as valuable as possible at your company to basically solidify your position just in case things do get a little rough. I mean, if you're the one who's the most valuable, you're the last one to go. And that's just what it is. That's life, I guess. It sucks, but it is what it is. My goal would be, even though I'm relatively new at my company, be like, well, he's newer, so he gets paid less. But he can do a lot of shit. So we're going to keep him, definitely. He'll be one of the last people we even think about laying off or firing. And it kind of turns into a wisdom of the crowd type thing. Like I said, the general sentiment and the feeling of the general population will dictate where the economy is going to go. So if people quit spending money, all these companies' profits go down, all these companies' revenues decrease. That kind of chain reactions and spirals into maybe not negative GDP, but our economy isn't going to grow as it has been in the past couple of years nearly as fast, and that will lead us right into a recession. And that's kind of where we're heading in a lot of ways. I mean, people's savings are depleted, credit card debt all-time high. People are not leaving their jobs to look for new ones. Job openings are falling. People aren't buying cars. People aren't buying houses. Home sales are like near all-time lows right now. You just can't afford it. And it's kind of too risky right now because people don't know where we're headed. Like I said, I think election's going to have something to do with it, but we'll see in another, what do we got? Like a week. We have like 1 week, another week, and then say maybe one more week after that to figure out all the bullshit that's going to happen with the election. I'll be following that pretty closely though, so we'll see when we get there how that's going to go. But the direction of the country in general is going to be decided here within a week in some sense. So we're gonna find out soon. We're getting really close. This is kind of what I've been waiting for to see what's going on. My personal tact of how I'm handling this is literally just save up as much cash as I can. Like I said, stay solid at my job, and just be ready for anything, opportunity or not. If everything goes to hell in a handbasket, all you can do is have enough money to have an emergency fund and survive, and then hopefully you have enough to basically invest on the downside when everything's falling. And if it keeps going up, we're just going to keep riding the wave. But that was really the theory that it's going to keep going up is, I don't know, I'm torn on this because exponential growth in the sense of the stock market and the economy is not possible, especially if our population doesn't keep growing. We can produce more efficiently. Obviously, like technology, machines, all these things can rapidly increase our production, but it also comes on the other end of consumption. So like if people aren't buying things at increasing rates, or the prices are at least going up, which they will continue to do, but the expectations and this theory of exponential growth on these, especially the stock market stuff, these companies, they can't grow indefinitely. It's not possible. So if you just keep expecting them to have 10% growth on 10% growth every year, it's just not possible. Compound interest catches up to you eventually. And this leads all the way back into I don't know, greed. I think it's fear and greed. The fear and greed index, I think we're right now at high greed to extreme greed, which basically means like these stocks are trading at like extremely high PE ratios where their valuations versus how much they earn is at all-time highs. Like the ratio is all skewed out of whack. And what's the Buffett quote? Fearful when others are greedy and greedy when others are fearful. Well, I'm not on the fearful side yet, but I'm definitely on cautious because we're pushing greed right now. Record everything, record stock market highs, record home prices. People are spending more money than they've ever spent because they have to survive, and now they're starting to cut back. But I don't know where it goes from here. I don't think it's going to take long to figure out. I don't know. I think by end of the year we're going to see a definite trend start forming. My guess is it's going to be negative. In reality, I kind of hope that it's not. I hope a little negative. We're not hoping for like the economy to fall apart. Obviously, that's not what anybody wants. But good and bad rest with every situation, I guess. So we'll be sitting here. I'll be talking about it. So if you get something out of the videos, give it a like. If you don't, dislike it. Tell me why. And subscribe. Come back. I'll be here tomorrow. Catch you then.